myself Vaibhav. In today's session, we are seeing that the euro is trying to climb back. It's way above 1.17 for the time being. It is oscillating closer to 1.175, and after rebounding from 1.16, I feel the time has come to see if there is a possibility of reversal and its upward momentum towards 1.18 or even beyond that. So in today's session of market movers, we will see how far this climb can take the Euro USD in next couple of sessions. If you consider the trading context for the day, we had final PMI releases for major European economies. Prior to that, we also got the PMI data for the Australia and lot of economic releases for the Japan. But most of our minor releases, and as I said, the PMI data was the final print, and we didn't really see any major revision. So we will not go into the details of that. And if you consider the market momentum at the moment, we saw some sharp moves after the emergence of acrimony between the United Kingdom and European Union regarding the Brexit bill. But apart from that, none of the economic release has caused any major move in the financial assets. So straight away we head to the unemployment rate, which has been confirmed at 8.1%, which is slightly higher than the prior month reading of 8%. So here in the European area, the Euro area actually, 19 countries of the European Union, where the Euro is accepted as the common currency. The unemployment rate is still at the elevated level because of the ongoing coronavirus pandemic, the COVID pandemic, and unless and until the vaccines comes and it is widely available, I think we will have to live with this higher unemployment rate, as it's next to impossible to resume the full economic activities. Later in the day, we are scheduled to get the United States PCE price index data for the month of August. And here we are not really expecting any major deviation from the trend line. And for the month of August, the expectations are of a reading of around 1% in terms of year on year. And the month on month figure might stand closer to 0.2%, which will be slightly lower compared to the prior month reading of 0.3%. We are also scheduled to get the jobless claims, and for the week ended 26th of September, we might see the figure close to 800,000, which has been its trajectory for last couple of weeks. Later in the day, we are scheduled to get the United States ISM manufacturing PMI data, and here the robust rebound which we are seeing in the manufacturing sector is likely to prevail in the month of September as well, and this month we might even see better reading, and the figure above 56 is being expected for the month of September. Now let's shift our attention to the technical aspect of the Euro USD, and then we will see the gold. Let's start with the Euro USD's technical outlook first. This is the daily time frame chart, and the Euro USD has rebounded after finding support closer to the 50% Fibonacci retracement of its rally, starting from 1.12 to all the way to 1.20. And after this substantial up move, the correction which we are experiencing now should be surprising, and it's the part and parcel of the movement of any financial assets. We see the trend movement and then the sideways action prevails. So here now the Euro USD can be considered to be in the consolidation phase, where the momentum has shifted to the bullish side for last couple of sessions after the prior steep fall. So here, coming to the Euro USD's lower time frame chart, we can see that both these indicators are still pointing to the continued weakness in the Euro USD. The price action is still below the central pivot point of this month's pivot point series. This is the first day of this month, and we saw the Euro USD opening below the central pivot point. So that in a way is pointing to the continued bearishness here, and the regression curve still remains bent on the lower side. But one thing we have to take note of is that we have seen this sharp up move from the lows close to 1.16, and unless and until we see the break below this immediate swing low, I feel that there are emerging opportunities where we can think about going in for the long position with the expectation of the Euro USD getting close to this immediate resistance zone of 1.178, this central pivot point price zone. And in such a scenario, the price levels of 1.17 is going to be deciding marker for us while determining whether to go for the fresh trade on the long side or not. But as I said, we are not really looking for the big trade here, as the trend still remains tilted to the bearish side, and because of that it's better if we simply work with the scalping kind of trading opportunities instead of going for the big swing trades. Now coming to the hourly chart, here we have the confluence zone of 100, 200 and 50 SMAs around 1.17 zone, and as you can see we had the reversal closer to 1.17 in yesterday's session. We also had discussed the possibility of going for the long trades in Euro USD in yesterday's session as well, and if any of you had gone in for this trade, you might be sitting on a good amount of profit. Now, as the European session has progressed, we saw this move first on the upside and then on the downside, and I feel if the momentum continues to remain tilted to the correction phase in the lower time frame chart, and if we are fortunate enough to get the Euro USD anywhere close to this 200 SMA, we should indeed think about going in for a fresh long trade in the Euro USD while targeting the retest of its immediate swing high, or the move even beyond that, as we discussed while looking at the 4 hourly chart. The central pivot point is somewhere close to 1.178 price level. So here, unless and until we see any clear cut break below this 100 SMA zone, we can continue to look for the buy trade, and I think we can utilize this prior consolidation phase low closer to 1.165 as our immediate stop loss. So look for the price entry for new trade anywhere close to this confluence zone of 100 and 200 SMA, and if we don't really see a fresh break below this crucial support zone, I think we are pretty much likely to see the resumption of the Euro USD momentum on the bullish side, and in due course of time we can expect the Euro USD to get closer to its resistance on the higher side closer to 1.18. Now let's see what's happening in the gold. We had looked at the possibility of buying the gold in a couple of sessions back, and from there onward the gold has traded well, with the bias being still remaining on the retracement side. Here we have seen the gold consolidating closer to 38.2% Fibonacci retracement of its rally, and for last couple of sessions it has been hovering close to 1880. So here in today's session we are seeing again the buying momentum coming into play closer to 1880 USD per ounce, and right now it is even above 1890 USD per ounce. But as things stand, we are not really expecting any big move on the upside straight away. Rather than that, we can expect this retracement to last some more time and move towards 1900 or even beyond that shouldn't be ruled out. So from scalping perspective, we indeed have the opportunities shaping up for today's session, and this phase of consolidation where we have seen the 1880 acting as the near-term support. We can utilize the same levels as our deciding marker for any trading opportunity emerging in today's session, while targeting on the higher side the central pivot point around 1910 USD per ounce. The regression curve is steeply bent on the lower side, but as the price action continues to hover in the upper band, we can expect some flattening of the curve in coming sessions. So coming to the hourly chart, we have this golden crossover, the 50 SMA crossing about 200 SMA in place now on the long side. This is also the fact that is indicative of the changing dynamics in the price action of the gold. We have seen the gold struggling closer to 1900, and on three occasions, including the current, pardon me, including the current move in today's session where it touched the US dollar 1900, and from there onwards the selling pressure came back in and pushing the gold lower. But on the lower side we indeed have good support taking us to bet on the higher side, the continuation of this upward trajectory of the gold. And in such scenario, what we can do is we watch out for the price action for next couple of hours. And if we see this correction deepening to some extent towards these immediate swing lows around US dollar 1885 or just lower than that, I feel we can indeed look for fresh opportunities after due consolidation. Here we have the support in the form of 100 SMA on the lower side. We also have these prior swing lows, and we can indeed look for getting fresh entry anywhere closer to this 100 SMA zone. And as we have seen, the gold has been able to cross and sustain itself at least to some extent about 200 SMA, and that gives us more reasons to believe that the gold's trajectory is changing from bearish to bullish, at least in the short term. So here we are looking at that opportunity to go for scalping trades in the gold, and with that we can target the price zone closer to 1910 USD per ounce. If we are going for the entry anywhere close to 1880 USD per ounce, we will be getting the reward of the move around 1.5 percentage point, and we will have to take the risk of around just below 1%. I think we will need to keep the stop loss anywhere closer to 1870 USD per ounce, and that should be good enough. So for a stop loss of around 10 to 15 USD per ounce, we will be in a position to target the 25 to 30 USD per ounce on the higher side, which will give us the risk reward ratio roughly of 1:2. So that's it from my side for today's session. If any of you have any idea or any query to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.